Welcome to UK Tax Unpacked. Picking a structure is like choosing between a nimble hatchback and a sleek EV. Both get you moving, but their running costs and street cred differ. We'll compare liability, headline tax, cash extraction, admin burden, and HMRC's digital roadmap. Master these five and your decision writes itself. First, tax on profits. Sole traders get hit by income tax bands, 20, 40, 45%. A company pays corporation tax first, 19% up to 50k, scaling to 25% by 250k. Sounds cheaper, but remember phase 2, dividends. Nick is the silent hitchhiker. Sole traders pay class 4 at 8% to 50k, then 2%. Directors pay Nick only on whatever salary they pick. Dividends ride free. Let's test the numbers. At £30,000, profit the two structures tie, each landing roughly £25,500 in your pocket. Push to £60,000 and the company edges ahead, about £47,500 versus £46,100 for the sole trader. Jump to £100,000 and the tables turn again. Sole trader keeps about £60,000 to £7,500, the company about £67,000 to £100. Why the switchback at six figures? Dividends above the higher rate threshold pay 34% tax, while the company's marginal relief corporation tax creeps past 22% effective. A low director salary saves Nick, but you lose the Nick deduction. Unless you retain profits for growth, the LTD edge flattens above roughly £90,000. Cash extraction realities. Sole traders are taxed once. Companies face corporation tax, then dividend tax, plus a hidden trap, Section 4 Fee 5. Draw more cash than profits allow and it becomes a director's loan. Leave that loan outstanding 9 months after year end and the company hands HMRC a 33.75% S455 charge. Yes, you reclaim it when the loan is repaid, but HMRC enjoys your interest-free deposit in the meantime. Sole traders never see this headache. Admin reality check. One self-assessment versus statutory accounts, CT 600, confirmation statement, payroll, and quite likely VAT MTD records. Budget £1,500 a year in professional fees for a limited company. Admin reality check. One self-assessment versus statutory accounts, CT 600, confirmation statement, payroll, and quite likely VAT MTD records. Budget £1,500 a year in professional fees for a limited company. Making tax digital. Sole traders over 50,000 turnover will file quarterly from April 2026, dropping to 30,000 in 2027. MTD for corporation tax is still in pilot. HMRC whispers 2027 at the earliest. So, modest profit, low risk, admin averse, sole trader. High profit, reinvestment, or you need that liability shield. Limited company. Model the numbers each tax year. Thresholds and rates shift. Whichever vehicle you choose, secure your trademark, track your numbers monthly, and keep HMRC announcements on your radar. And if you're a spreadsheet lover, grab the downloadable workbook linked in the description to play with your own profit scenarios. Safe travels down the tax highway. Thank you for watching UK Tax Unpacked.